All right, let's talk about stocks. Have you ever really thought about what it means to own one? It's easy to get lost in all the crazy charts and the experts talking a million miles a minute, but honestly, at its heart, it's a super simple idea. It's really just about owning a piece of the pile.
Okay, to get this, just picture a market. A busy, bustling market. And right in the middle, there's this one stall. Just one. And it's doing amazing business, selling the absolute best fruit you can find.
And this awesome stall, it's got just one owner. Yep, one guy. He built the whole thing from scratch, and he runs the entire show himself.
And because he's the only owner, every single cent of profit, it goes right into his pocket. It's a sweet deal, right? Super simple. But, well, a setup like that has its limits.
And this is the question that changes absolutely everything. What if it wasn't just him? What if lots of people could own a piece of that one successful stall?
So, welcome to the market, and I want you to think of every single stall you see here as a business. And to help us figure this all out, we've got our guide, Coach Kobo. He knows this place like the back of his hand, and he sees something interesting happening over at that popular stall.
See, the owner's doing great, but he's got big dreams. He wants a bigger stall, more kinds of fruit, maybe even a second location. But there's a problem. All that stuff costs money. A lot of money. More than he's got on his own. It's a classic business headache, right?
So he comes up with this totally brilliant idea. He decides to chop up his stall into tiny little pieces and sell them. And that's it. That's the basic idea behind the whole stock market. You offer people a piece of the ownership in exchange for the cash you need to grow your business.
And that little piece of the business, that is a stock. It's that simple. So when you hear about buying a stock, you're not just buying some number on a computer screen. You are literally buying a real tiny piece of an actual business, just like this stall.
Okay, so why would you even want to own one of these little pieces? Well, there are two huge reasons. First, if the stall makes a profit, hey, guess what? Everyone who owns a piece gets to share in that profit. And second, if the business gets bigger and more successful, that little piece you own becomes way more valuable. Not bad, right?
Now here's where things get really interesting. The price of that little piece doesn't just stay the same. Look at this. When word gets out about how great the stall is, everyone wants to buy a piece. So what happens? Demand shoots up, and so does the price. Boom, from one note all the way to 5. But what if business slows down a bit? People might get nervous and start selling their pieces. All that selling floods the market, and the price can drop right back down again.
Let's make this even more real. Let's do a little practice run. Imagine you and 3 of your friends start a lemonade stand. It's a hot day, you do great, and at the end of it all, you've made $100 in profit. So you split it 4 ways, right? Everyone gets $25. That $25, that is a dividend. It's your share of the business's profit paid right to you, because you're an owner.
Okay, so as soon as these pieces of the stall go up for sale, you start to see different kinds of people show up. And their mindset, how they think about this, totally changes how they act. It really boils down to 2 very different approaches.
First up, we've got the FOMO trader. FOMO, fear of missing out. This person sees the price jumping from 1 note to 5, and they just get swept up in the excitement. They're not really looking at how much fruit the stall is selling. They're just watching that price go up and yelling, "Give me more, I gotta get in on this."
And then you've got the smart saver. This person kind of hangs back and just watches. They're not interested in all the frantic buying and selling. Nope, their focus is completely different. They're asking the real questions. Is this a good business? Is it strong? Is it going to be around and growing for years to come? So let's put them side by side. It's pretty clear, right? The FOMO trader is all about the price. They're thinking short term, and they're riding a roller coaster of hype and fear. But the smart saver, they focus on the business itself. They're playing the long game, and their best friend is patience. It's like 2 owners living in 2 completely different worlds.
And look, this isn't just a story about some make-believe market stall. Think about the companies you see every single day. That local coffee shop you love, the corner store, the company that made the phone in your hand, they're all just businesses. And owning a piece of their stock, it's the exact same idea. It's a real thing with real buildings and real customers.
All right, so let's wrap this up with the most important things to remember. First, and I can't say this enough, a stock is a piece of a real business. Got it? Good. Second, the price goes up and down based on how many people are buying versus selling. It's just simple supply and demand. And finally, never forget that the value of your piece over the long haul totally depends on how healthy that business is. A strong business can grow, and a weak one, well, it can fall.
And that brings us to the last and maybe the most important question you should always ask yourself. When you decide to buy a stock, what are you really buying? Are you just chasing a price that's jumping all over the place? Or are you investing in a business that you actually believe in? The answer to that question, well, it changes everything.